Okay, so again, I'll repeat what I just said. Yeah. So scalping point number one. Okay. When we want to be a better trader, the first thing you have to do is you stick to one market. Okay. Let me go to the first slide for those who are not there. Okay. It's 5 points on how to be a better scalper. And in particular, our first point is you need to stick to one market. And here, the point is basically what it says. It's not rocket science. All we're saying is you need to learn to stick to one market so that you are not jumping from one market to the other. For example, there are people who like to stay to trade stocks. There are those who trade, of course, the forex market. Then there are those who trade all other. It's called indices and so on. And so there are very many, very many. So you have to pick one and say, okay, fine. If I'm going to be doing stocks, then let it be stocks. If I'm going to be doing foreign currency, then let it be foreign currency. Okay. If it's indices, then let it be indices. Because you want to go in and out of the market several times, and you can't be shifting from one market to the next market. Okay, assuming you pick the forex market, in this case, the currency market, then what do you do? Again, as a scalper, you don't have time to be jumping from one pair to the next pair to the next pair to the next pair. So ideally, what you should do is you, before you start your trades for the day, you scan through the markets and see which one has volatility. By volatility, I mean which one seems to be moving a lot. And how do we do that? Well, let me just give you an example. Sometimes, again, in the morning, before London opens, you'll find that the market coming from midnight is a bit slow. Okay, so it's not doing very well, but it seems to be moving like that. Okay, whereas you might find others that are like that, like that. So if you ask me, between these two markets, market one and two, okay, this one seems to be a better one to trade, market two. Of course, you're hoping that eventually they will start going like this, bigger candles and, something like that. So, of course, one, two, three, three is much better. Three is the best. So you scan three charts and you find chart number one, this is what's going on. It's almost like consolidating. And then chart number two, yes, it's an improvement from chart number one. It's better to trade this one than one. But then chart three is even better than two. Why? Because you can see bigger movements in the market. So you pick chart three because you want to do scalping. All right. Preferably one currency. Now, for me, I go for Euro USD. And my bias is because Euro USD is the most liquid pair in the world. Okay, which means almost 40% of 40% of the daily market. Well, it's about $5 to $6 trillion, $6 trillion daily. About 40% of that is Euro USD being traded. All right. So anyway, it's a bit of a stretch, but yeah, it's pretty, liquid. And so why is that good for scalping? Because then it allows you to go in and out, in and out, in and out many times. Again, if you see me trading, you see I do like one trade at a time and then I get done. Then I look for the next setup. All right. I might go into the charts just to show you what I mean by that. All right. Next slide. trade in one direction. So remember, you want to be a scalper. So how do you trade in one direction? Well, you look at the charts, and what you do, you actually let me see. No, no, there. All right. Okay. So uh, again, in the mornings, you find that the charts. What am I doing here? Trying to get a pen here. All right. Sorry, I'm not doing it very well, so I'll do this over here. Yep. So you find that in the morning, usually after the breakout in London, because you want to be a scalper, so your first choice is to trade during London breakout or soon thereafter, because in the mornings, most mornings, AM, um, you find the market is moving a lot. Okay, but again, it will start like if you pay attention, it's probably moving in a particular direction, be rallying in a particular direction, maybe before it changes direction. So while it's going down, you can say it's on a down trend, or at least not to say the trend, but it's moving downwards. Okay, but it is a small trend. So the idea of trading in one direction is to be aware that actually, in your mind as a scalper, you know that maybe this is a support area, okay, and where it was coming from was a resistance. So because you are not aware of all this before, uh, oops, you're not aware of what was happening before, all you know is, okay, so you're kind of aware that it's going down. You pick and choose, you say, okay, I'm going to be doing sells. So for the next 5 minutes or so, okay, maybe the next uh, support zone is somewhere there. Okay, maybe this market came up, now it's hit the resistance, now it's coming down. And you can see it's coming down. So clearly, that's your goal. Your target is there. And because this is a 1 minute chart, it might just take like a few candles to get here, maybe 4 or 5 minutes. So for the next 4 or 5 minutes, or even 10 minutes, it's going to be going down, then up, then down, then up, then down, then up, and so on. So the idea of trading in one direction means that because it has a general downward trend, okay, you're going to be looking for sells, for sell opportunity, not a buy. So for the next however long it takes to get there, yours is to look for sell opportunity. And how do you get the sell opportunity? Every time the market tries to move back up again, you'll be busy selling. Sell, 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 sell until it turns and starts sliding down. Remember, as it slides down, you're making profit. Every time it tries to raise its head up, 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 and you're busy selling, 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 selling until it reaches up and starts going down. As it goes down, you're taking profit. Again, the idea continues. Buy, comes down. Buy, sorry, sell, comes down. Direction is sell. So if that is the direction that was, the charts were showing. On the other hand, if the market seemed to be on a buy, then you can say that the direction that you're going to be trading is up, uptrend, or rather up. So you're going to be trying to just buy each time. So the market comes down. As it's coming down, every time it comes down, you're busy buying, buying. Why buying? Why? Because you know eventually it's going to start going up. Okay, so down, buy, 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 and so on. Now that is one way of trading. Okay, at least that's my style, and I do what is called counter trends. I do counter trends because I don't want to trade in the same uh, direction as the currency. I do the counter trends. However, other people want to be sure. They want to be sure what they are seeing. They want to trade only in the direction of the currency. In the direction of the currency. Please note that in both cases, you are trading in one direction. So what's the difference? In the first case, I'm doing counter trends. Yes, the direction, which I'm trying to explain here, is downwards. But each time the market tries to come up, I am busy selling and then it goes down. Okay. Every time the market tries to go up, I am selling. Okay. And these are at different levels, sorry, different support and resistance levels. Every time it goes up, I am selling. Now, this one, the direction is uptrend. So what you're doing is every time the market goes down, you're busy buying. So then you take profit, then the market goes down. As it goes down, you are buying. Okay, and then you take profit. As it goes down, you're buying. Okay. In the case where you just want to buy in that direction, it means that you're not very comfortable with the counter trend thing, but you know the market is going up. And this is probably what most people will do anyway. So they will wait as the market goes up, they'll be buying. When it reaches there, they stop. Wait for it to come down again. Once the market has confirmed by second candle that it's on its way up, the second candle will be somewhere around there. You enter again and you keep buying, 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 and then you stop, take profit. The market comes down again. After the first candle, on your second candle, you enter again and you buy, 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 and then you stop, and so on. So the point here again I'm trying to emphasize is you choose a direction. So for me, if you watch my trading, I might be selling for like half an hour or something, where this setup is done, another setup gets ready, and then I go in and I do my setup. Okay. So this setup is done, then it starts again, another one, then that one is done, and then so I can say there are like three different setups. This first setup here, okay, consolidation, then maybe another setup here, and then another setup here. What am I saying? What I'm saying is, in this case, I'm just going up in that direction. In this case, I'm going up in that direction. And in this case, I'm going up in that direction. Keep the direction. That's the point. All right. Step number 3, know when to enter. So again, like I said, depending on whether you are a counter trade guy, you're comfortable with doing counter trades. So then you enter in the opposite direction. Or if you are just a normal person and still not very comfortable to trading counter trades, then you enter on your second candle of the direction you want to. You let the first candle go. Remember when we studied about the 3-bar reversal? Okay, so there will be 3 bars that will form, and you look at the trigger bar. So the trigger bar will always be, so if it's going up, you're doing buys. So this candle might be the measuring candle. Then we have that one. Okay, it didn't go down, but it tells you something is happening here. So, and this maybe is a different, maybe it's a bullish candle. Then after this one closes, on the next opening of the next candle, which closes after. So if you are going up, then this is where you would enter, because this is what we call the measuring candle. Okay, and then we say this is the apex, and this is the trigger. Okay, so this one here, but you have to take the trade only after it passes the last high, which is this one here. All right. So if you're that kind of a person, then you'll be doing your buys a little more cautiously until it comes down again. Okay, a little more cautiously until it comes down again, and so on. But for me, what I would do is usually when the market passes the last high, because this is the last high, psychologically, think of it that the market will come back to revisit this point. Think of it as the market will come back to revisit that last high there. The market will come back to revisit this high. So that's what you keep doing. Okay, know when to enter. You're either entering down there if you're doing buys, or if you're doing sells, you're entering maybe up there. So you decide the direction, then you decide where you're going to be entering, and be consistent about it. The next one is kind of hard to discipline yourself, but it has worked for me again lately, because my first few years, months, I was careless. I spent a lot of time on the screen, and that was painful, because you spent hours and hours and hours for what? Then you end up losing. Or yes, you do win, but you spend like 4, 5, 6, 7 hours only to get what? To get 10 pips or to get 20 pips. So, but now I've learned that I limit my screen time. Otherwise, you get tired. You get tired. You start watching the screen for like an hour, 2 hours. You become tired and you start becoming careless with the trades. And point number 5, focus on charts and zones. In scalping, you're not there for the long hog. You're not trying to look for 300 pips all at once. No, you want the 300 pips in small pips. So if the zones, the charts, okay, maybe there are 2 or 3 or 4 zones. Okay, the support resistance, there are very many. Assuming those are the zones you have, okay, and the market like that, there, like that, okay. So zone A, zone B. When you are trading, you don't see all of this at once. You don't get to see all of this at once. Okay, you only get to see this, and time is moving. As time is moving, this unveils itself. So in terms of your trading, you say, okay, fine. Because the market is going this way and I'm here, right now I'm playing in zone A. So in scalping, I want to make money between zone A and zone B, just this space between here and here. So as the market goes up a little bit, I have to be diligent on trying to find out how I get down. So because I know it's going up, but the general direction, or it has reversed, it's just going up a little bit and then it'll go down. So you start entering your trades when it turns, at the turn, okay, until you reach down here. When it's down here, again, if it came from zone B on its way up, chances are it might stick here for a little bit, consolidate, and then rally down for zone B. So you always trade between zones, from zone A to zone B, from zone B to zone C, back to zone B, then back to zone A, or A to B, and so on. If you think of your trading in terms of zones, you will do much better. You are not at this point and thinking of how you'll take profit down there. No, 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 no. Think of just the different levels, because that is small. That distance is far enough to give you even like normally when I trade, I can do even 50 to 100 pips just to move from, you know, from this zone to the next zone. So don't be greedy and say that, okay, I want to take from here, I've measured and it's about 80 pips down here. Don't say you want to take profit 80 pips. No, because for it to get 80 pips, it's going to go up, down, up, down, up, down, up, down, up, down, up, down, and then finally down there. But for somebody who's scalping, this so many ups and downs, you'll have taken 10 over there, 5 over here, 10 over here, 10 over there, and before long, you even have 100 instead of the 80. So focus on charts and zones. So I told you it was 5 points, but I had some bonus points here that I remembered. Okay, so these are just some bonus points for you to think about. One, a losing trade does not mean you are a loser. And you should know that by now, that when you are doing your trades and you start losing, it doesn't mean that you yourself, you're a loser. No, it just means that the market is not working for you today. So it's okay. It's okay to let it go and come another day. The following day is also another day. It's a trading day. Or if you're trading in the morning and the market doesn't seem to be, going well for you, it's okay to let go of those trades, kill the trades and come back in the afternoon and see how the market is. Even the very, very, very successful traders do the same. They lose. And when they lose, they don't sit back and say, oh, I am a loser, I am blah, blah, blah. No, no, no. Yeah. Point number two, your business is not trading, it's finding the right trades. So wait for the right trades to come to you because they will come. All right. Especially once you've decided that I'm a scalper and today the market seems to be going down. Fine. Then relax. Don't shoot for anything that you see. No. You wait for the market, and every time it starts coming up, it means in your mind, aha, this market wants to go up and then turn and start going down. Then, if you are like me, then you start trading, start doing your sales because it's going down. Well, if you are normal, typical people, you're saying, okay, fine, it's coming up, but where is it going to turn? Once it's turned, I want a confirmation, and then I go in, which is fine. Okay. Um, Trade the reaction, not the news. There's going to be news every so often here and there, and the news cause markets to move a lot. Okay. When that happens, you don't react. Sorry, you don't follow the news. You actually see what the impact of that news is on the market. If it has caused the market to rally up, well, that's an opportunity for you. How do you react? You go in and you start selling because it has gone up. And you just continuously do sales, sell, sell, sell. Yeah. The next point is a bit new for many of you, but it is something that we need to start doing. We need to start keeping a journal, basically writing down what you are doing. So write everything, the ugly and the good. When you're losing trades, it doesn't mean you don't record them. You do record them. What is the advantage of doing journaling? Journaling helps you do what we call back testing. You can always go back and look at your trades and see where you went wrong. So keep a journal. And then our last point is the psychology. Remember, you cannot put your emotions in the forex market. Okay? When the markets are moving up violently, you know, you don't also become emotive. You try and be calm. I know it's very hard to say, but yes, you have to do it. So when you lose trades, this is the time you learn how to control that emotion, because right now it's still dummy money. So you're okay, you can lose. Okay. Because by the time you start working with the real money, then for others, if you haven't controlled your psychology, it might be devastating. Devastating. But if you get to the point where now you've controlled your psychology, then you're okay. Because trust me, you will lose money in the forex market. You will. It's a guarantee. You will. But if you're diligent and you manage that, you will make even more. So I think I'd mentioned to you guys that personally, I've lost a lot of money. Okay. A lot of money. But I have equally made money. That I won't lie. There are times I would make a lot of money in a very short time. Very, very short time. Once I realized that I'm good at this, or I mean, I can do this very well, then I started, seeing the results, reaping the fruits. Okay, that's all I had for today. But as always, I will stop the recording, but then we can now stay for questions and answers if you have any questions. All right, I'll pause. I'll actually stop the recording, but now you can ask questions.